Hey there, savvy investors. Welcome back to the channel. I'm Mr. Ernabach, your friendly neighborhood investor, here to dive into the world of dividend-paying stocks. Today, we're unraveling the mysteries of the stock market, making it as clear as crystal. But before we jump in, do me a favor and hit that like button. Let's aim for 1,000 likes on this video. All right, let's lay out the roadmap for today's journey. We'll start by understanding the basics of the stock market and how initial public offerings, IPOs, work. Then, we'll explore the concept of stock ownership and the role dividends play. Finally, we'll wrap up with a look at some big names like Facebook and Apple, and maybe even sneak in a tip or two from Warren Buffett. Sound good? Let's dive in. So picture this. You've got this amazing business venture, but you need an infusion of cash to take it to the next level. That's where the stock market comes into play. But before we delve into the nitty-gritty, let's understand the foundational concept of an initial public offering, or IPO. This is like the grand opening of your company to the public, where you offer shares for sale to raise capital. Take the iconic example of Facebook's IPO in 2012. Mark Zuckerberg, the brains behind the social media giant, decided to take the company public, offering shares to investors. The frenzy surrounding Facebook's IPO was palpable, with millions of shares being snatched up in a matter of hours. Zuckerberg's move not only made him a billionaire virtually overnight, but also provided the fuel for Facebook's expansion and innovation. Now, let's shift gears and talk about stock ownership. Historically, owning stocks meant more than just owning a piece of paper. It meant owning a stake in the company's profits. This concept dates back to the early days of the stock market when dividends were the primary incentive for investors. But as times have changed, so too has the focus shifted. Nowadays, many investors are more concerned with the potential for capital appreciation rather than regular dividend payouts. However, dividends still play a crucial role in certain investment strategies, particularly for those seeking to generate a steady stream of passive income. Companies like Apple, Coca-Cola, and Johnson & Johnson are renowned for their consistent dividend payments, making them favorites among income-focused investors. Now, let's break down the mechanics of dividends. When a company earns a profit, it has several options for what to do with that money. It can reinvest it back into the business for growth, pay down debt, or return it to shareholders in the form of dividends. Dividends are typically paid out on a quarterly basis and represent a portion of the company's earnings. For investors, dividends can provide a reliable source of income, akin to receiving rent from a property investment. And while dividend yields may seem modest compared to the potential returns from growth stocks, they offer stability and consistency, an attractive proposition for many investors, especially during periods of market volatility. But what about stock splits? This is another fascinating aspect of the stock market that often confounds newcomers. Put simply, a stock split is when a company divides its existing shares into multiple shares, effectively lowering the price per share. The goal is to make the stock more accessible to a broader range of investors and increase liquidity in the market. Companies like Apple and Tesla have implemented stock splits in recent years to make their shares more affordable, sparking renewed interest from retail investors. Lastly, let's touch on the legendary Warren Buffett and his investment philosophy. Buffett, often referred to as the Oracle of Omaha, is known for his long-term approach to investing and his aversion to stock splits. His company, Berkshire Hathaway, has never split its Class A shares, which currently trade at sky-high prices about $600,000. Buffett believes in investing in quality companies with enduring competitive advantages and holding on to them for the long haul. While his strategy may not be suitable for everyone, there's no denying the wisdom behind his approach. But don't worry, the Oracle of Omaha wouldn't mind taking your money as well. That's why Mr. Buffett created Class B shares, which are more affordable to us little folks as well, trading around $400. In conclusion, dividend-paying stocks offer a compelling blend of income generation and long-term wealth accumulation. Whether you're a seasoned investor or just dipping your toes into the stock market waters, understanding the nuances of dividends and stock ownership can help you make informed investment decisions that align with your financial goals. All right, let's recap. We've covered IPOs, stock ownership, dividends, stock splits, and even got a glimpse into Warren Buffett's world. The stock market might seem like a maze, but with a bit of know-how, you can navigate it like a pro. Thanks for sticking around, folks. If you enjoyed this video, don't forget to subscribe and hit that bell for more investing insights. And hey, drop a comment down below with the word investing if you want to see more content like this. Oh, and speaking of tools, don't forget to check out the link in the description for a handy dividend tracker. Until next time, happy investing.